What?
Hi, I'm Leslie Hook with the Lex Column, and I'm here to talk about T-Mobile results today with Sujit Indap. Sujit, T-Mobile reported pretty strong results today with over 1 million new branded postpaid subscribers. What do these numbers really mean when you dig down into them?
Yeah, so T-Mobile is doing what they've been doing for the last year and a half, which is just getting a lot of American wireless customers to move to T-Mobile. Take a step back. T-Mobile has been the 4th place U.S. wireless company behind Sprint, Verizon, AT&T, much bigger. Those guys were much bigger and had just dominated T-Mobile, which was really a fringe player. About a year and a half ago, they went public. They listed their shares in the US. Of course, they're largely owned by Deutsche Telekom, the European company. And they hired a very flashy, dynamic CEO named John Legere, who started something called the Un-carrier strategy. The problem with the US wireless companies is that they had a strategy of taking advantage of consumers through giving them subsidized phones. You'd buy a phone, it'd be cheaper than the list price, an iPhone for a couple $100. The downside was you had to stay with that carrier for 2 years, and they got you on the monthly plan. T-Mobile's whole strategy has been to disrupt that, to have a phone that was unsubsidized, but a monthly plan that was cheaper and allowed you a lot of flexibility in leaving. And so they've been able to use that to really hurt Verizon, AT&T, Sprint. And again, they've been adding subscribers like crazy, like 1 million per quarter, and that continues, and we saw that in today's results.
But what about profits? I mean, they're very disruptive. They've, given their competitors a tough time. Are they?
Yeah. And so really what they've started is a price war. So everyone has been hurt profit-wise in the industry. T-Mobile for now has been fine taking market share. They've been getting credit in the stock market for taking market share, but the profits are starting to lag and to suffer, and people are starting to notice. So they raised their subscriber goals for the year. They think they're going to add something like 5 million subscribers this year, close to 5 million, but they left their EBITDA profit goal the same, just because adding those subscribers at lower pricing plans is painful.
So who else does this remind you of, this business model?
Yes, so this sounds like a little internet retailer called Amazon. And so Jeff Bezos, much like John Legere, are visionaries, and both their conceits have been to add revenue, add market share at the expense of profits, which they think will come later. The problem is Amazon has faced its reckoning this year. Its stock is down 30% almost, and growth has slowed a little bit, and investors are finally asking the question, if and when profits will show up.
So, I mean, the argument for Amazon for years was that it could just flip on the profit switch if and when it wanted to. What about T-Mobile?
Yeah, so the challenge with T-Mobile is that they are still a fringe player. Verizon and AT&T are the real giants in the industry, and it's a very capital-intensive industry. There's some spectrum auctions coming up that are very important for the wireless providers to participate in and buy spectrum so they can have the capability of adding rich data to their plans. The problem for T-Mobile is that they already have a lot of debt, something like $25 billion. And so the hope was that they would merge with Sprint perhaps to form a strong number 3 player to take on Verizon and AT&T. That seems to be dead for now. So T-Mobile in the medium term has a big problem. They're not very big. They've added a lot of subscribers. Profits aren't there. So it's unclear where they can go from here. And obviously investors are starting to ask questions.
Thank you very much, Sujit.
Thank you, Leslie.